In just the last 12 months, silver has gone up over 130%. 130%. And right now, today, it's actually pulling back. So what's going on? Is this the beginning of the end? Or is this actually the best buying opportunity of the decade? Stick around, because by the end of this video, you're going to understand exactly what's moving silver right now, what one major analyst is predicting for the rest of 2026. And this is the part most channels completely skip, a sneaky tax rule that could quietly eat into your profits if you're not careful. Welcome back, or if you're new here, welcome. On this channel, we break down financial markets in a way that actually makes sense, whether you've been investing for 20 years or you just heard the word silver for the first time last week. Quick disclaimer before we dive in. Nothing in this video is personal financial advice. I'm here to break down what's happening, what analysts are saying, and what tools you have available. Always do your own research and speak with a qualified advisor before making any investment decisions. All right, let's get into it. What is silver actually doing right now? So here's the current situation as of mid-March 2026. Silver is sitting at around $78 per troy ounce. And today specifically, it's down about 2 to 3% from yesterday's close. Now, before you panic, let's put that in perspective. A year ago, silver was trading at roughly $33 to $35 per ounce. Today, it's near $78. That is a 131% gain in under 12 months. So even with today's dip, if you bought silver a year ago, you've more than doubled your money. This is actually the fourth straight day of declines. So there's a short-term downward trend happening. And in a second, I'm going to tell you exactly why. But here's the important thing to understand. Short-term dips in fast-moving assets are completely normal. The question is this just a breather? Or is the rally over? We'll answer that. Why is silver dropping today? Okay, 3 main reasons silver is falling right now, and none of them are a mystery. Reason number 1, the strong dollar. First, the US dollar is getting stronger. Now here's something super important for any new investors watching. Silver and gold are priced in US dollars globally. So when the dollar gets stronger, it automatically makes silver more expensive for buyers in other countries, which reduces demand, which pushes the price down. Think of it like this. If you're in Europe and the dollar just got 5% stronger, you're suddenly paying 5% more for the same amount of silver. You might buy less. That effect adds up across millions of buyers worldwide. Reason number 2, oil prices and inflation fears. Second, oil prices are elevated right now because of the ongoing conflict in the Middle East. Higher oil means higher inflation fears, and when people expect inflation to stay high, the expectation for interest rate cuts goes down. Why does that matter for silver? Because silver doesn't pay you interest or dividends, it just sits there. So when interest rates are high or expected to stay high, people would rather put their money in assets that actually pay them a return, like bonds or savings accounts. That pulls money away from silver. Reason number 3, profit taking. And third, after a 130% run in 12 months, some investors are simply cashing out. That's called profit taking. It's healthy. It happens in every bull market. Someone who bought at $34 and is now sitting on $78 might decide, you know what, I'm going to lock in some of these gains. So that's the short-term picture. Now let's talk about the bigger story, and this is where things get really interesting. The $300 silver prediction, real or hype? There's an analyst named Andy Schectman. He's the CEO of Miles Franklin Precious Metals, and he's been in this industry for decades. And recently he came out with a forecast that got a lot of attention. He believes silver could hit $300 per ounce by the end of 2026. $300 per ounce. That's almost 4 times today's price. Is that realistic? Let's break down his actual reasoning, because it's more logical than it might sound. Argument number 1, gold to silver ratio. Right now, gold is trading around $5,000 per ounce. Silver is at $78. That means you need about 64 ounces of silver to buy 1 ounce of gold. That ratio, 64 to 1, is historically quite high. Historically, the ratio has averaged around 40 to 1, sometimes even lower. If gold stays where it is and the ratio normalizes, just goes back to historical averages, silver would need to jump significantly to keep up. Argument number 2. Industrial demand is exploding. Here's something a lot of people don't realize. Silver isn't just jewelry and coins. It's actually a critical industrial metal. It's used in solar panels, electric vehicles, semiconductors, and electronics. And global demand for all of those is growing fast. The world is going green, and green technology runs on silver. Supply hasn't kept up with that demand. That's a recipe for higher prices over time. Argument number 3. Mainstream investors are just arriving. Schectman's argument is that silver is, in his words, just waking up. Most retail investors, everyday people, haven't touched silver yet. They're still in stocks and crypto. As more people discover silver, that demand could push prices dramatically higher. Now, to be fair, $300 is an aggressive target. Even Bank of America, which is a mainstream institution, has floated a target of around $309 per ounce as a bull case. That doesn't mean it's guaranteed, but it tells you that this isn't just fringe thinking. What do forecasters say more conservatively? More conservative forecasts put silver at around $81 by the end of this quarter, and potentially $97 within the next 12 months. Not $300, but still a meaningful move from where we are today. The takeaway? The short term is bumpy. The long-term picture, according to many analysts, remains constructive. But past performance never guarantees future results. The tax trap nobody warned you about. Okay, this next section is really important, especially if you're new to precious metals investing, because there's a tax situation that catches people completely off guard, and if you're not prepared for it, it could seriously eat into your profits. Let me explain it simply. What you need to know first, silver is a collectible. For tax purposes in the US, the IRS classifies physical silver, bars, coins, rounds, as a collectible. That one word changes everything. Here's why. When you sell stocks, long-term capital gains are taxed at a maximum of 20% federally. But when you sell silver and other collectibles, the long-term capital gains tax rate goes up to 28%. That's nearly 40% higher than stocks. And if you're a higher earner, there's an additional 3.8% net investment income tax on top of that. The big 2026 change, new reporting rules. Now here's what changed. As of January 1st, 2026, the IRS updated how silver sales get reported. Previously, dealers only had to file paperwork if you sold a very large quantity, like 1,000 ounces of silver at once. Very specific thresholds. The new rules shift to a dollar-based system. Now, if you sell more than $10,000 worth of silver to the same dealer in a calendar year, even in multiple small transactions, that sale gets reported to the IRS. At current prices of around $78 per ounce, $10,000 is only about 128 ounces. That's not a huge amount for a serious silver holder. The cost basis problem and why it matters. Here's where it gets really dangerous. When a dealer reports your sale, they also report something called your cost basis, which is basically what you originally paid for the silver. If they don't know what you paid, maybe you bought it privately or you have old coins you inherited, the IRS defaults to assuming your cost basis is zero, which means they tax you on the entire sale amount. Example, you sell $9,000 worth of silver. Your actual purchase cost was $3,000, so your real gain is $6,000. But if you can't prove that purchase price, the IRS could tax you on all $9,000. At 28%, that's a $2,520 tax bill instead of a $1,681. That's $840 gone because of paperwork. The good news, this is totally manageable. Here's the thing, none of this should scare you away from silver. These are manageable rules if you know about them in advance. And there are no laws requiring you to sell silver. The tax only kicks in when you sell. 3 simple things you can do right now. 1. Keep receipts. Every time you buy silver, save the receipt. Note the date, price per ounce, and quantity. This is your cost basis documentation. It's that simple. 2. When you sell, you can choose to sell your highest cost purchases first. This is called specific identification, and it legally reduces the taxable gain on each sale. 3. If you're investing for the long term, consider holding silver inside a self-directed Roth IRA. Qualified withdrawals from a Roth IRA are completely tax-free, meaning all those gains could be yours without a 28% haircut. None of this is complicated. It just requires a little planning up front. What should you actually do? All right, you've made it this far, which tells me you're serious about understanding this. So, let me give you a practical framework for thinking about silver right now. If you're new to silver and considering buying, the current pullback might feel scary, but historically, buying during short-term dips in a long-term uptrend has worked out well for patient investors. The key word there is patient. Don't bet money you can't afford to hold for at least 12 months. Silver is volatile. It can swing 5 to 10% in a single week. Start small. There's no rule that says you have to go all in. Even buying 5 to 10 ounces to understand how the asset moves is a perfectly valid first step. If you already hold silver, don't panic sell based on a 2 to 3% daily dip. That's noise. Look at the 12-month picture. But do take this moment to get your records in order. Find your receipts. Make a simple spreadsheet noting what you bought, when, and at what price. And if you're sitting on big gains and thinking about selling, consider spreading those sales across tax years to avoid pushing yourself into a higher bracket in any single year. If you're just learning, great. That's the best position to be in because you're learning before you have skin in the game. Spend some time understanding the difference between paper silver, like ETFs, and physical silver. Both have their place. Physical gives you tangible ownership. ETFs give you liquidity and ease. Neither is objectively better. They serve different purposes. Let me quickly summarize everything we covered today. Silver is around $78 per ounce right now, down about 2 to 3% today, driven by a stronger dollar, elevated oil prices, and normal profit-taking after a massive 131% year-over-year rally. Analyst Andy Schectman sees silver potentially reaching $300 by year-end, based on the gold-to-silver ratio, exploding industrial demand, and growing mainstream investor interest. More conservative forecasts point to $81 to $97 over the next 12 months. New 2026 IRS rules mean more silver sales get reported, especially over $10,000 per dealer per year. The 28% collectible tax rate applies to long-term gains. Keep your receipts, use specific identification when selling, and consider a Roth IRA for long-term tax-advantaged exposure. Most importantly, none of this is as scary as some people make it sound online. Silver is legal to own, legal to sell, and the tax rules, while stricter, are completely workable with a little planning. If you found this video helpful, please hit the like button. It actually helps more people find this content, and it tells me to keep making videos like this. If you're new here and you want straightforward market analysis without the hype or doom and gloom, subscribe. I put out new content regularly, breaking down exactly what's happening in precious metals, commodities, and broader markets. Drop a comment below. I want to know, are you currently holding silver? Are you thinking about getting in? Or are you watching from the sidelines? I read every comment. And if you want to go deeper, my next video is going to cover the gold to silver ratio in detail and why some analysts think it's the single most important indicator in precious metals right now. Make sure you're subscribed so you don't miss it. That's it for today. Stay curious, stay informed, and I'll see you in the next one.